We're good to go.
Perfect. Hey, good afternoon or good evening, everyone. Thank you for joining us for tonight's education series. My name is Gaynell Brady. I'm the Executive Director of the Lower Ninth Ward Homeownership Association. And tonight's special guest is Mr. Errol Williams with the City of New Orleans Assessor's Office. I'm also joined by two wonderful, amazing staff members of the Lower Ninth Ward Homeownership Association, Sarah Bruzy, who will be driving this airplane. You do not want me to fly it. And MA Sheehan, who's going to be sitting in a co-pilot seat with me as well, to make sure that this is a fun and engaging session. And we're just so excited to have Mr. Williams here with us. Again, this is a part of our monthly education series where we present topics as it relates to homeownership and living in New Orleans. And the mission of the Lower Ninth Ward Homeownership Association is the preservation and creation of homeownership and the resident-driven revitalization of our community. And right now, I'm going to turn it over to Mr. Errol Williams, who I feel like has been in office forever. I'm a native of the area, and this is the only name I know of. So either you're getting old, Mr. Williams, or either I'm getting older and I understand what your job is now.
Well, thank you, and good evening to everyone. I am 21 a few times. Okay, but the Lord's blessed me with good health and still a willingness to want to work. Okay, tonight I was asked to do a presentation on what does the opening of the tax rolls mean to everybody. Okay, well, what we call it the public inspection period. And what I did was that I figured that before I go there, I have to try and give people an idea. Okay, how this process works. Okay, when it comes to the assessor's office, because what happens is that, let's see if I get my presentation on. If I don't get it on, I'll cover it anyway. Okay. Oh, I'm not getting it in there. I know I got this. There we go. Can you see that PowerPoint presentation?
Not yet.
Not yet?
Okay. You hit share screen?
Well, let's see. I'm looking for a share screen. Usually it's up in the upper right-hand corner. I don't see it.
On mine, it's down at the very bottom in the middle.
The bottom in the middle?
It should be a green button.
Okay. Nope, that monster's not there. Why is it? Let's see. I'm trying to see if I can get it by making the screen smaller. Nope, it's not a green button. I don't know why not on mine. I see add notes, but that's it.
On Zoom, you don't see it at the bottom. If you're on your Zoom page, it should be at the
yeah, no, I'm not on Zoom page. That's what it is. Okay.
Yeah, go to your Zoom page and you should be able to click share screen. Okay, and it'll show you which screens.
Kill this. Yeah, there we go. All right. Now let's get to the meat of the data. Oops. Not the one I want. What I want is I'm still having problems getting there. I know I got it here on the flash drive. Let's see. Oh, here we go. Can y'all see that?
No.
Still don't see it. I got share screen on the, let's try it again. See, hit share. Okay.
There we go.
There we go.
Yep. There it is.
Y'all see the PowerPoint presentation?
Yes.
We do.
Okay. All right, then well, I'm in good shape. Basically, this is an aerial photo of the Lower Ninth Ward. Okay, and what I wanted to do was to try and go to from one page to the next page to give you an idea what's going on. You know, this is basically the Lower Ninth Ward and the Holy Cross area, which we consider Lower Ninth Ward. Okay, now we treat Holy Cross a little different than we treat Lower Ninth Ward, and the reason why that the sales values on the Holy Cross side are substantially higher than what occurs on the lake side of St. Claude Avenue. So, you know, just to give you some perspective. But in Orleans Parish, okay, the assessor is an elected office and basically I'm responsible for valuing properties, taxes, and issuing homestead exemptions. That's basically all I do. A lot of people get caught up with that I collect taxes and I sell the property and stuff like that, but I don't. The objective of the assessor's office is to determine the fair market value, okay, of all property in in the parish, and that's okay. Ensure that all property owners are treated equitably. The assessor is not a part of the city of New Orleans government. Okay, we're actually tenants in the building, but people often think that we're part of that. We work for the mayor or the city council, and that's not true. Okay, all parish assessors are considered parochial office holders, and if you were in another state, it would be a county office versus a city office or a state office. The assessor does not calculate tax bills. We don't issue tax bills. We don't collect taxes. Okay, it's performed by the Bureau of Treasury in Orleans Parish and the Sheriff's Office in any other parish. I mean, all 63 other parishes, the sheriff is the tax collector. Okay, having been in city government as long as I have, I spent 7 years as a tax collector, so I'm familiar with both sides of the collection side as well as the assessment side. We don't sell property for tax delinquencies. Okay, that's performed by the Sheriff's Office. Okay, in the other parishes and by the Department of Finance and the other parishes. Next we have is what is an assessment? Because some people think that assessment is really an appraisal. It's done, it's defined by the International Association of Assessment Officers as a value set for real estate and personal property by government as a basis for levying taxes. Okay, there are difference between appraisal and assessors, or we do it a little differently. We have used the same methods, but we use more statistical data, and the appraisal guy gets an invitation to come in the house and see what the quality is on the inside type of construction, where we only get a chance to look at it from the outside. Assessments are a percentage of fair market value of the appraised value. So we come up with an appraisal, but to give you a little background how that comes about is that we take sales over a longer period of time. Maybe we take 2, 3, or sometimes 4 years of sales and average them out what they sell for per square foot. And we use that information to try and come up with what the rate is for each respective neighborhoods. When I became the single assessor, okay, I had to divide New Orleans up into neighborhoods. So we created 393 neighborhoods for residential and 141 neighborhoods for commercial property owners, so that we would be using like kinds, and I'll use like kinds in this sense. That if you're familiar with Pontchartrain Park and Gentilly Woods, that's 2 separate subdivisions. But when you look at the sales of that area, okay, the houses are pretty much the same. So we use that as one respective neighborhood. Or if you're familiar with Faubourg and Marigny, which is divided by St. Claude, the property on the riverside of Faubourg and Marigny sells for a lot more than the property on the lakeside of St. Claude Avenue. Okay, and that's from Elysian Fields to Press Drive. So that's basically how we get to defining the neighborhoods to get properties that are like kind. Assessments are a percentage of the general set by law. Assessment percentages can vary by use type, meaning that in Louisiana, land is assessed at 10%. Residential property is assessed at 10%, and commercial property is assessed at 15%. So that means that the building on the commercial property is 15%, but the land is going to be at 10%. If it's public service property, then it's 25%, and the assessors don't assess public service property. The Louisiana Tax Commission is the one who assesses the public service property. So, that's just give you some idea on the assessment process. Okay, I'm sorry. I wanted to go to the next one. I can't seem to get there. See if I can go to number 4. Now I'm having a little problem, but I'll get past it. All right. I went back the wrong way. Next one is what is a millage? Because you got to know the assessment and the millage work hand in hand. The millage is defined by the International Association of Assessment Officers as a tax rate expressed in mills per thousand. What millage means is one 1,000. That's all it means. So if a mill is 1,000 of $1. Millage rates are either voted on by the people or calculated mathematically. In Louisiana, they're voted on by the people. If you're living in Texas, they're calculated, because then the assessments are determined. First, the budget is decided by the local government, then the assessment is determined, and the millage rate is a calculation. But that doesn't happen in Louisiana. In Louisiana, we vote for all millage increases. So some of you are familiar with the recent votes where the mayor wanted to change how the money was allocated to the library, and people voted it down. But then when Alderman Zoo said we're going to take some of that money and give it to City Park, and people voted it up. So those are the tax, that's the tax rate is really the millage. That's all it is. Voted millages do not change. Okay, they're all rate-driven systems. So that means that we can't change it unless the people who we serve, okay, the public votes to change that. Calculating millages can change yearly, but that's on a budget-driven system. Ours is rate-driven, so on the budget-driven system, that's like the Texas model, but in Louisiana, we're on a rate-driven system. Budget revenues plus total assessed value equal to millage rate, okay? And then the millage rate, okay, times the assessed value equal to property tax bill. So that means once I get the assessment and I got the millage rate, okay, then I can come up with a tax bill calculation. I'll give you an example. I use this chart for an example. In Arkansas, the millage rate is $70.10 per thousand. In New Orleans, it's $143.95. In Metairie, it's $118.14. In Mississippi, Jackson, Mississippi, it's $19.13. In Mobile, 63. And in Florida, okay, it's 0.019. And Austin, 0.02. And the reason why I'm giving you those because they're lower millage rates. But the reason is why is that lower? Because their assessment percentages are different. In Arkansas, they use 20% for commercial and 20% for residential. So if I got $100,000 a house, in Louisiana, it's going to be $10,000. Okay, is the assessed value. In Arkansas, it's going to be $20,000 is going to be the assessed value. But if I'm in Florida, it's 90%, so that means 90,000 will be the assessed value if it's residential. If in Texas, it'll be 100%. So that's why the millage rate is lower in Florida. I mean, not Florida, but in Georgia, it's 40%. So when you start trying to calculate a tax bill, this is what a $100,000 house would pay in each one of those different states. Arkansas, $1,400. Louisiana would be $1,439. Metairie would be $1,100. Jackson, Mississippi, only $191. Okay, and Mobile, $600. And in Austin, $2,227. So just give you an idea. I know that if you live in Houston, it's $2,500 for their millage rate is slightly different, but that's just giving you a perspective of how the millage rates vary by different places. But then this is just to give you a feel for a $100,000 house. So if you want to do $1 million house, just go 10 times that, it'll be a $14,000 tax bill if you're in Little Rock, Arkansas. So I've just given you some perspective. Reappraisal requirements. Louisiana requires the assessor should be valued at least once every 4 years. Now, it's impossible for us to do all the properties in 1 year, so it takes us a number of years to try and accumulate the data. So over the past 30 years, I've always taken the approach that I take 25% of the city and I try and do the revaluation each year so that when I get to the 4th year, I've done 100% of the city. Last year, we tried to get all of it done, and actually year before last, we tried to get all of it done, and we got 80% done, and we still had a 20% to be done in 2021. So we completed all of that, but all the valuations are not based upon what the properties are worth today. The valuations are based upon a date set by the Louisiana Tax Commission. And that date is, most people don't realize that the values that we have on there are based upon what we thought they were worth on January 1, 2019. So as I continue to see in my own office, every day I get stuff in, but every Monday it looks like I'm getting between 8 and 10 $1 million home sales, which is basically most of them were in lakefront or in uptown New Orleans, but it's beginning to get scaring me as tax assessor because I'm saying, gee, I cannot believe that people are paying some of these prices for some of these houses because of low interest rates or what they call short-term rental market driving some of that. Okay, but as you can see, that assessment is only 10%, is 10,000, and 25,000 for public service property. So
Can I ask a question?
Go ahead.
So if you do 25% every year, but it doesn't go into effect until the quadrennial rolls around?
No, that's the issue. That was the issue that the new chairman of the tax commission felt that I shouldn't put it on the rolls until then. It says you have to do it at least once in a 4-year period. So if I go and do it in 2018, then I don't come back to that neighborhood until 2 years or 3 years later, unless the neighborhood is like the Greenway, and I'll use the Greenway as an example, because along, say, 3 years ago, okay, you could buy a double house for $125,000, $150,000, okay, and all of a sudden, when they finish the greenway, the values of those double houses start going up to 325 to 350 for the same double houses. So as assessor, I have an obligation to go back and change the neighborhood. You can do it more frequently in the 4-year period, but when the values get so far out of line that the guy is paying $400,000 or $300,000 for a house, and the other guy is sitting there with the same identical house on there for the 150 that it was before, then I got to bring in equalization. Is what the statutes require us to do, to try and make sure you equalize the assessment so everybody pays their fair share. So even though they're paying 325, they may not be at 325 because then I have to do what they call indexing, which is roll the value back to the last revaluation day. So even though a guy, and I got a letter today saying that the guy paid $431,000 for this double house, but I can't change the assessment on that until I change the whole neighborhood. I can't do it individually. I have to do it for the entire neighborhood, but I have to have enough sales to justify changing it before that next quadrennial revaluation comes in. Hopefully, does that help answer what my problems are in trying to manage this?
I think so. And what kind of notice then goes out? Like if you do, so with the greenway, so you redid a whole neighborhood.
Yeah,
How do you get notified?
Here's what happens. Under the law, the statute says that anytime an assessor raises the assessment more than 15%, that he's got an obligation to send a notice to every property owner that he raised the assessment greater than 15%. That's the law. The practice of my office is that if I raise your assessment or decrease your assessment or reduce it, I send you a notice anyway. Okay, and it's all done just before the opening of the tax rolls, because that's when you have the public inspection period, which is the real nature why I'm doing this presentation, to give people an idea how that works. That I have to give you notice beforehand. Now, there's a new law that passed a year ago, and it said that if I raise your assessment more than 50%, then I have to send you a certified mail to notify you that your assessment has increased. And there's another law on the book that says if your assessment increase is more than 50%, then the city has to do what they call a phase-in. And
Right.
The phase-in says that if I increase your assessment, say your assessment is $100,000, I raise it to $200,000. Well, next year you would only get $125,000, pay taxes on $125,000, and then the next year you pay on $150,000. In the third year you pay $175,000, and the fourth year you pay on the $200,000 assessment. That's what it's called. We call it Act 718, which was passed in the legislature. I was able to get help with what you call it, J.P. Morrell, the senator at the time, to try and get this passed. We were trying to get something called a cap. If you go around the country, you'll see that Texas has a 10% cap, meaning that if the assessments go up, say the values go up, and the assessment is from 100 to 200,000, you can't raise it to 200,000. You can only raise it by 10%. That's what Texas is. Arkansas is really at 5%. And the last time I checked, Chicago, they were at 7%. So I'm just giving you some idea. Now that did pass out the legislature. This year for the first time in I'd say since 2006, I've been trying it, but thanks to the effort of Senator Bowie, Representative Willard, Senator Mindy Landry, and Stephanie Hilfrey, we were able to get it out on the ballot. Now it doesn't get voted on until 2022, but
Right.
It is going to be on the ballot. So but here's my challenge. My challenge for me is for a tax assessor is, how do I get the rest of the state convinced that New Orleans needs to have this? Because the rest of the parishes are sort of opposed to it, but we were able to get it passed because I got my Assessors Association, what they call it, the holy nose, and not oppose it. So we got it out of the legislature, and now it's just a matter of getting we need a majority of passage statewide. We know it's going to pass in New Orleans because New Orleans values have been going out the roof. Everywhere I look, I see more increases in values in neighborhoods, and saying, gee, why are they paying so much for this? But then I realized that same guy who was buying a house for $700,000, he looks at the note, and down with the interest, he was paying on 4.5%, 5% interest. But if he looks at the note, now he's paying on 2.5 or 2.75, and he's got the same note. So he's paying more, and then more people are moving here from away than never lived here before, which is driving some of the prices up. And short-term rental market and that's another challenge for the assessor's office. The number of people who are buying property, renting it out as short-term rental, and don't live here. So even though they come in with the necessary ID, we still have to go back and do heavy investigation and wind up canceling homestead exemptions. Okay, because the person lied. So But that's okay. That's a full-time job. It used to be just easy, but now it's okay. I have two people. That's all they do is chase down short-term rentals, and does the guy actually live who's renting the property out? Because people complaining about it in the neighborhood, okay, that they're creating all kind of problems. But mine is to make sure that they're qualified. So if you bring me a driver's license or a state ID and you show me utility bills, I have no reason to deny you unless I find out through further investigation that you live somewhere else. So it's a full-time task for me, but we know we got to do it. Okay.
We appreciate it.
Okay, but I'll try and get back to my agenda here. Okay. Sales are reviewed over a 4-year period, and the average price per square foot is developed for each neighborhood. A field review is conducted by my appraisal staff to verify building permits and assign a condition factor to the property. We either put excellent, very good, good, average, fair, or poor condition. And based upon that average rate that we come up per square foot, there's a percentage adjustment for each one of those type of classifications. Excellent will be at the high end. Okay, and then average is going to be average, but the poor, we would have to make adjustment reduction based upon the poor condition. All new construction, renovation, demolitions, addition permits are also reviewed individually. So my people go out and physically look at it and make sure that it's completed before we place it on the rolls. Adjustments to the rates are made for condition, excessive square footage, and other factors. And I say excessive square footage, that if you're in a neighborhood with average houses at 1,200, 1,500 square foot, and the guy builds a 3,000 square foot house in that neighborhood, his rate per square foot that he sells it for is not going to be what the average is for that neighborhood. It usually sells for less per square foot because of the size, but he's overbuilt for the neighborhood. Land values are calculated using vacant land sales in the neighborhood. Sometimes we have to do something called an extraction method. Okay, building value is calculated using the net difference of land sales and regular home sales. So that way we back in, and I'll give you a case in point that if I take the houses that are sold on Park Island Drive, and I got one sale at one lot sold for $500,000. Some people subscribe to the theory that $500,000 what that lot's worth, but the harsh reality is there are no other lots out there, vacant there. And then the other side of it, if I take the average price that people are paying for the house and you use the extraction method, you come up with somewhere around between 20 and 25% of the value of the purchase is the land value. So when you back into that, the rate comes out to somewhere around $20 a square foot instead of the $45 or he paid per square foot to buy the property. So that's an appraisal, concept. But the average person thinks they should be paying on the $500,000. So that means I can't put the lot on for $500,000. I have to make adjustment for the land based upon that. But land values plus building value equal to total value. That's generally the way it works. But you have to back into the land value sometimes to get there. These are just some of the laws that cover what we do. 1951, all property situated in state except such as expressly exempt from taxation by law shall be subject to taxation on the basis of the assessed valuation thereof. The other one is 2331, which is 4700 series of the revised statutes. On and after January of 1978, all assessments of real property shall be based upon a reassessment of such property, and such real estate shall be reappraised at least every 4 years thereafter. So that means the tax commission every 4 years sets the date. The January 1, 2019 date is set by the Louisiana Tax Commission. So any assessments I make today, I have to make sure that I'm using the values that we use to come up with the values in 2019. So a lot of times you'll see something on the rolls and you see a guy paid $400,000 for it, but it's still sitting on there at $256,000. I can't change it, okay, unless I change the whole neighborhood. So there would have to be a substantial amount of sales to be able to do that. Assessments are made on the basis of condition of things existing on the first day of January in each year. In Orleans Parish, a little different. Orleans Parish, August 1 of the preceding year is used as the payment, as payment is made at the beginning of the tax year, and all other parishes is made at the end of the year. So if you look at, not just in Louisiana, most people pay the taxes at the end of the year, everywhere I know. But in Orleans Parish, somewhere around Delachef Morrison's time period here, he ran out of money and he went to the legislature and was able to let them be able to collect taxes at the end of the year and then collect taxes at the beginning of the year. So that law changed somewhere long before my tenure in government. But okay, it's something that still exists. And for them to go back, somebody's gonna have to loan the city money and I'm just being facetious, to be able to run the city so that they'll be able to collect the taxes at the end of the year. So, it's for those accountants they understand the term once you make election on internal revenue, it says from LIFO to FIFO, you can't go back, and you can't go back here unless somebody comes up with the money. The city ain't never gonna have enough money. I can share that with you because I've had the responsibility of collecting the taxes and watching it grow over the years. But the cost of providing the services continues to rise, and that creates they call it another problem. The revenue growth is not at the same rate as the expenditure growth of the expense of what it costs to provide the services. 1957. Yeah, go ahead.
So for 2022, taxes are based on the value on August 1st, 2021?
Yes.
Is that not the case because it's still based on January 1, 2019?
That's correct. Okay, what happens is that you see an increase and you receive a notice, that means that you either added onto the property, which is we call a change of character, or you renovated the property. Like I've had a discussion with one of my staff members yesterday, and the issue was related to the fact that all the property in the neighborhood, that's not renovated is selling for $100,000 to $150,000. This is around the St. Rock area, but any property that has been renovated is selling somewhere around $240,000 to $250,000. So you can't take this renovated house and say that that now it's renovated, it should be treated the same way that the property that's been there for the last revaluation, which has not been renovated. So those are some of the debates we get into the office, and what's real and what you can do and what you can't do.
So you would revalue that property because it's renovated. And then would it be the value of a renovated property on January 1st, 2019? Like the property is changed, but the date doesn't?
Yeah, it's called indexing. So you have to index back to what that property would have sold for if it was in excellent condition.
Okay.
That's where the challenge is, because sometimes you got to be an econometrician to be able to figure that out. Even though you may say, well, I'm going to take the cost of living from 2018, 19, and 20 and say that's basically what I have to make. This is what it should be increased to. So that's why you won't see the value of the property that it's sold for as but you got to come up with some number that gives recognition to the fact that the property was renovated, or there was an addition added to the house. Or the other one is demolition, but most of this renovations in addition.
Right.
See.
And I'm still trying to understand back on the Lafitte Greenway idea. So if it has increased in value since 2019, you still go with the 2019 values, right?
Yeah, because that's the last mandatory revalue date.
Okay, so it doesn't really matter if it increased in value until 2023.
Yeah, I can't take the 20 sales and the 21 sales and say that that's what that neighborhood is, unless I got enough of them to say, hey, that at least 50-60% of the property there is sold for greater than what I have it on there, so my neighborhood is undervalued. Now, keep in mind, there's another test that the public doesn't know much about, and that is that once the tax rolls close, the Louisiana Tax Commission comes into the assessor's office and selects 300-400 properties, and based upon their test, the assessment has to be within 10% plus or minus of the statutory requirements. So that means if the property is on the rolls for 50,000 and it's sold for 100, then I'm at 50%. I'm out of line, and I can't have more than 15% of those properties that fall outside of that. So it's a balancing act in many instances, but you got to try and make sure you stay close to the sales and your assessments are in the ballpark, even though, we've had cases where the tax commission has told us that your assessment on this property is too high. And then they come back a year later and say, well, here, this property is too low because it recently sold. And so, we battle over that, but usually we wind up coming to some kind of compromise. But it's called a sales ratio study, where they do a sales ratio study. And generally what we do is we try, and before we do a neighborhood, we take the sales that occurred over a 3-year period, average them out, and look at where the assessments would fall and see how far they're out of line with what the statutory requirements are. And that's generally how I wind up selecting neighborhoods. I don't just say this section of the city, I'm going to do it this year, and this section will do it. No, I actually have to go and see which ones are out of line. In some cases, like I use East New Orleans, values out there have been flat. I haven't seen a whole lot of increases in values out there. They've been flat, but then in the city, it's, it's changing. Meaning that the Fallbrook Marigny that I knew is now moved over on the other side. It's almost up to Claiborne Avenue or North Robertson, because we see more and more renovations going over in that neighborhood. Okay, which was low income and low values, but now you begin to see higher values because more renovations are being done in that neighborhood. So that neighborhood, I can assure you that that's one on my radar for the forthcoming revaluation period, which will be 2000, for this year coming up. Now, what we're going to try and do differently this year is I'm going to try and hold them, unless it's so far out of whack that I can't ignore it. But I'm going to try and hold them and try and get as many of them done as possible. So if I do 25%, I may wind up with 50% being changed, because then when I do that, I also have another factor that has to be I have to be able to handle the volume of people that come into the office. Okay, and I think we addressed that, where when I first came here, and going back to, I got a picture from 1963 that shows that the same line that I saw when I first became the single assessor, okay, it was the same line that was back in 1963 when you do a revalue and try to do them all at one time. But it's trying to service the public and give everybody this time period. And I'll cover some of that later on, which is what I've done differently that other parishes have not done, because we get more scrutiny here than the other parishes do. Okay, with this process. Okay, on 1957B, all property subject to taxation shall be listed and assessed at the proper percentage of the fair market value as requested by as required by the Constitution and the laws of the state. So that's just giving you some idea. What happens if you disagree with my assessment? This is what the public inspection period is all about. When you disagree with the assessment, there are 1, 2, 3, actually 3 levels of appeal. The first level of appeal is, notices are sent out to property owners. State law requires the assessor to notify all property owners when an assessment change is more than 15%. We send out notices on all changes to assessments. And that's just my practice. Okay, property owners can apply can appeal their assessed value informally to the assessor's office during the period of July 15th to August 16th this year. If the 15th is usually 15th to the 15th, but if the 15th falls on August 15th falls on a weekend, then we push it back one more day. That's why it says 15th to the 16th. An owner may file a formal appeal to the Board of Review if the owner does not agree with the assessor's value and it says from the 16th until the 19th. My practice, that's what the law says, but my practice is if you file an appeal on July 15 or July 19, we process it anyway to the Board of Review. And the Board of Review is basically the city council. The city council hires an outside appraisal firm who goes and looks at the property, and their main focus is to try and determine, whether or not, what the value of the property is, not whether or not the assessor is right or the property owner is right. Their job is to determine what they think the value of the property is worth. And that's generally how that process works. Now, once they render a decision, then I'm obligated to post that as the assessment for that property. But if I disagree with that, or the property owner disagrees with that, then they have as the owner or the assessor may formally appeal to Louisiana Tax Commission. Okay, if either party does not agree with the Board of Review decision, that gives you another bite at the apple. Now, the Tax Commission has a full-time appraisal staff. Their staff role is to come in and determine what the fair market value of the property is. And they make a recommendation to the commission. Now, the commission can take the recommendation and go with it, or they can decide to do what they want to do. And I got cases out there where they have done some situations. I have one I'm in litigation right now because it's a land rate issue that they decided to cut the land rate in half for somebody, and I disagreed with it. So that I challenged it in court. But that's where the next step is, which is says they may file suit, meaning I may file suit or a taxpayer may file suit if they do not agree with the value. My practice is usually I don't get involved in the small residential stuff, but when you throw something out of line, if everybody's paying on $25 a square foot land rate, I can't sit by and let the tax commission or anybody, because of maybe it's some relationships with somebody, change the value and throw it out of line because it's not uniform. So that's what my case is before the court right now on that issue, very same issue. Okay, I feel comfortable we will win because everybody else is paying on $25. There's nothing unique about this property. It's a side yard for the person. So if they wanted to sell it in Lakeview, they can get $250,000 for the lot. Next is the appeal process. Okay, the assessor's office can and will make adjustments to property owners' assessment if they find that we have erred in the initial evaluation during the open road inspection period. Keep in mind, the assessment process is not exact science. It requires professional judgment and looking at statistical data to try and come up with what we think. So sometimes the computer gives you information based upon what the factors are, but then they don't know that inside that house is gutted out or that it's got foundation problems and issues like that. So we make it a burden on the property owner needs to bring the documentation supporting their claim. Recent appraisal, if one is available, a list of comparable sales in the neighborhood, and that not a list of current assessments, because assessments are determined by us. We're looking for what the sales are. Homeowners insurance declaration page would give us an idea of what the value of the house would be. We know what the land's going to be worth because we generally have pretty good numbers on that. If there's damage or condition issues with the property, contractor's estimate for the repairs, a dated color photograph showing the condition of the property. I've looked at so many properties from photographs that's coming in and realized that the value we placed on them is incorrect, and that we make the adjustments based upon it. Remember, it's a guessing game. It's not an exact science, so we try our best to get in the ballpark of what the property worth based upon its condition. Potential values of buffers.
It's interesting. I have a question. That you can't bring in the assessed value of the neighboring properties is really interesting to me, because that is what you have determined to be the value of the neighboring properties.
If I've done it right, then everybody should have pretty close to the same thing. If my information is right, sometimes my database is wrong, and the person may have $100,000 assessment, and we're trying to figure out how did that when everybody else is getting 300,000 in the neighborhood. In those cases like that, okay, well, when the person brings it to, I raise the assessment, the one that's screwed up. That's just the way it works. But the intent is to try and make sure everybody gets. If my computer program has the right square footage and the condition issues on the property, then identical properties should be very close to each other. Okay,
right. And so, doesn't it make sense that you could bring in the neighboring assessments to show why is mine so high when the identical property of 2 doors down is lower?
Yeah, you can make that argument, but when you say that, okay, it may, when we go back and review it, the neighbor next door, if he's got a lower assessment, okay, it's got to be a screw up in this office, okay, because who you are or what the relationship does have nothing to do with this process. The computer doesn't know, okay. And I saw one the other day. I looked at the house and said, wait a minute, this house is not 1,500 square foot. This is a 2-story house. How did this assessment get put on there? Well, when we dug into it, somebody took it from this what they call the self-reporting form. And the guy put an addition on there, and we never had it.
Mm. Yeah.
So those things happen, and when you bring it in, it's a good argument, but the argument is going to be: here's what they're selling from your neighborhood. This is the rate we have, and is there a condition issue that should change it? If you say that if this guy is lower than you, it's identical house, then we got to make adjustments for that.
Okay, great. That's what I would have thought. Thank you.
Okay. Next is homestead exemptions. Under it's provided by Section 20 of the Constitution. It provides relief of $75,000 of value for owners' primary residence. So primary residence, we use the term domicile. That's where you usually get all your bills and everything goes there. Okay, you vote from that address most of the time, and we have access to data that usually gives us the idea where you lived in the last 10 years if we have doubt. So that's what we've been spending a whole lot of time doing that, trying to keep that concept honest. Owners can get one homestead exemption. You can't have one nowhere else. If it's a community, it's a husband and wife, you can only have one. Now there's a only exception I know of is if husband and wife are divorced and they haven't separated the property. They passed a law in 2009 that said that the husband and wife both can get a homestead exemption if they have a divorce decree. Separation is not allowed. If it's a legal separation, that doesn't count. So just to give you some idea. Special assessment exemptions are provided in Section 18. The assessment can be frozen from any increases. Taxes may vary depending upon the millage rate, meaning that if you make 65 years of age and this year $100,000 or less, that's husband and wife or individually, then you can have your assessment frozen for the rest of your life. That means that when I do revaluation once every 4 years, assessment won't change, only the rate could change if voters change the millage rate. Disability freeze, okay, and it's only one time shot.
If I turn 65 this year, I can get the special assessment level for my 2021 taxes?
Yes, whatever the assessment is for the year when you turn it, that's what the assessment gets frozen at.
So you would submit a change order
Nope,
for January of 2021?
nope. Here's how it works. You make the application. Okay, your application needs to be into this office before we close the tax rolls. There's no retroactive issuance, okay, on the age freeze or disability freeze. So that means
if I turn 65 this year, I can't actually have my special assessment level until I'm 66.
Nope.
Until the year I turn 66.
No, here's what happens. If my birthday falls on December 30th,
right,
I can apply for an age freeze, okay, in 2021 for 22.
For 22.
Yes,
okay.
As long as you get that information into our office before we close the rolls, okay, and certify, then I apply that whatever the assessment is for this year, okay, and that gets frozen at that amount.
Okay, thank you.
Let's see. The other thing is this disability freezes are the same application, except that you got to apply every year. Now, in 2014, as I recall, it was on the ballot and the voters voted it down statewide. And what it said was to make it permanent. So what I find unusual is that most people, and maybe the law was, the way they worded it on the ballot was incorrect, but most people, once they become permanently disabled, a year later, they're still disabled. Okay, so, but why make those people go through the process of having to apply each year? I've been trying to get another legislator to take that bill and see if I can get a constitutional amendment again and get it on the ballot and have it properly worded so people will know what they're voting for. Now, if you're a military veteran and you got 50% disability, okay, then okay, you can receive what they call it a disability freeze. But if you got 100% disability, and that's why you see the 150,000, you can get the equivalent of 2 homestead exemptions. You get $150,000 off on the exemption on your property. So if I got a $250,000 house, I'm only going to pay the police and fire millage. If I got a $300,000 house, I'm going to pay taxes on the amount over the $150,000. So just to give you some idea of how that law works. Surviving spouse of a serviceman killed in the line of duty, it's not just servicemen, it's policemen, EMS workers, anybody killed in the line of duty, they get 100% tax exemption until the spouse sells the house or remarries. It doesn't transfer from one house to the other, so the spouse has to stay in that same house. So just giving you some idea. Other potential buffers, Act 718 is the 50% rule I talked about earlier. If an assessment is increased by 50% or more during a reappraisal, increase is capped at 25% each year, meaning the tax collector can only collect 25% of the increase each year until it gets to the 100%. Original value is 25% plus year one. Well, he gave it. I covered that earlier, but it gives 50% the next year and 75% the next year what that original value was. Okay, property has to have a homestead exemption to qualify. Does not apply to renovations or additions. Restoration tax abatement. If you're in buying property in the historic neighborhoods or ones defined by the city council as economically deprived neighborhoods, you can use this tool to help. It's used as a tool to help spur development, but you can use it because what it does is it exempts only the renovation value for a period of 5 years with a renewal option for an additional 5, meaning that I buy a neighborhood in Holy Cross in that neighborhood for $100,000, and I spent $200,000 renovating it. Once I get approved for this restoration tax abatement, then, and we call it RTA, then the $200,000 I spent is frozen for 5 years. So, it's what do you call this? It's an inducement to do it. And we right now, I'll say this to you, because everybody's been talking about when Folger's Coffee was trying to get an exemption. There are more exemptions on RTAs. Okay, there's $500 million exempt right now off the tax rolls because of this RTA program, but it has been a good inducement for people to renovate properties in neighborhoods that maybe we shouldn't have seen it done. But hey, it's helping New Orleans come back. I think part of it is our revitalization has been motivated by some of this, the RTA program. Original value is not exempt, but any new construction not exempt. So new construction, if you build a new house, you're not going to get the RTA. It has to be something you renovate. Okay, it has to be approved by the State Department of Commerce and the City Council. So just to give you an idea, I'm getting to the end of this, but then there's 2 websites that are available to you. Mine has a lot of information on it that, okay, I like to boast that few assessors around the state put this much information out there, but it's part of my concept of disclosure. As an accountant, I've been taught disclosure. The term they use today is transparency. That way you get to see what everybody's getting assessed at. And if I screw up, bring it to my attention, we clean it up, because sometimes we do make mistakes. Nobody's perfect. But NOLAassessor.com is my website. If you want to find out what a property sold for, there's a button on the left-hand side once you get the aerial photograph, and it says yearly sales. It'll give you the sales of every property. Okay, if it's in dark blue, then it means it's sold within the last year. If it's aqua blue color, once you put the sales button on, the yearly sales button on, that means it's 2 years old. And if you see it in gray, that gray haze over it, that means that it's 3 years old of sales that's out there. The city's website is NOLA.gov one stop. That website, if there's any type of permit issued on that property, okay, or a code enforcement liens, anything like that, one stop, all you have to do is go to the app, and it will give you all the information you need on that property, whether or not. And sometimes you can get the inside photographs of the property being built, because sometimes I tell the first-time homebuyer people that if you see a house you like and it's recently built, you may be able to find the plans on the city's website at one stop. So it's just another source of information for everybody. Now I'm open for questions. Well, more questions if you have some, but that, I guess, that includes what I call my presentation on how this process works. When the tax rolls open, it's left up to the taxpayer to come up here. We do it by virtual, or if you want to come in person. I think right now, I think Thursday we got 11 people scheduled. Friday is 10. As we get close to and people are the same all over. They wait to the last minute. As we get down to the wire, okay, towards the 16th of August, I know we're gonna have a lot of people who come at the last minute. But that's just human nature. People usually wait to the last minute because they're busy, got busy schedules. But we try and service everybody. We have, like I said, we have 42 Zoom accounts. Okay, you can schedule it with an appraiser or customer service rep, and anybody can usually answer most of the questions that people have when it comes down to the assessor's office. When it comes to tax collections, we understand some of their problems, but we can't fix all of them, but we can help you navigate through them. Questions?
To schedule the online informal appeal, how do you do that?
Just go to NOLAassessor.com, and there'll be a portal on there. The only thing I forgot to tell you something is basic. Appeals. You can file an appeal online. You can do it 3 or 4 o'clock in the morning. Somebody will always get back to you, but we have an online appeal system that's open during the open of the rolls. Once we close the rolls, then we shut it down, and everything has to be formally, or you schedule an appointment with one of the customer service reps. But then once you go to the website, the information, it'll take you to how to file an appeal and how to schedule an appointment, okay, with one of my appraisal staff. But that's appraisal staff or the customer service staff.
I'm not seeing it, but maybe that's because open rolls hasn't started yet.
No, it hasn't. Matter of fact, I think when we talked about it, appeal I think they told me that they weren't going to set it up for the 19th.
Yeah.
But officially on the 15th, on Thursday, we open.
Okay.
Anybody, but I know that people have already begun scheduling, because you got to do it 24 hours before you do it, and if before you come in, or if you do it virtually. Okay, because we take walk-ups anyway. We still take them. The city won't let you come in without a mask, and then we take the temperature still when they come through the door. So that's just part of the process. Now we have 3 locations. Locations are City Hall, Algiers Courthouse, and the church. I don't know the name. Church. The church is located right behind them. Driver's License Renewal Bureau, right down Veterans and Pontchartrain Boulevard. There's a big church there. We usually post it on our website, the 3 locations. I always forget the address, but Okay, they've been very good to us in allowing us to use their church facility for the open the roads. And most people like to go where you can park. City Hall is always difficult trying to get down here to park. Okay, because that's central business district and parking spaces are scarce. Other questions?
No questions from Facebook.
No questions from Facebook? Gotcha. All right, well, I would like to thank y'all for the opportunity to at least share a little bit of how this process works. And remember, we can answer most questions. And having been on both sides, I usually know how it works. Okay, on the collection side, the biggest thing you have to worry about, and I didn't talk about what happens if you don't pay your taxes. The city can only sell property tax bills when they are 1 year delinquent. They can charge you, interest of 1% a month, and a 5% penalty for the first year. Okay, after 5 years, they have two programs, and I didn't mention that, but it's called SOAP and DOPE. That's what we call them. And the SOAP is a sale of adjudicated property. It's just an acronym for it. And DOPE is a donation of adjudicated property. So as a Lower Ninth Ward organization, you may have gotten some of the programs, some of the property acquired through the DOPE program, donation of adjudicated properties. Usually the city will donate it to nonprofit organizations. Okay, but they have 180 days to renovate that property or put it back into commerce. In the case of the SOAP program, that's when the Civic Source, the company that handles this collections for the city, delinquent collections, they will hold it, those sales, for a tax certificate, which means you buy the tax bill. And then there's a sale that they have, which is adjudicated property sale. That means the taxes haven't been paid on for at least 5 years. So, and they try their best to try and get those properties back into commerce. Again, thank y'all.
Last thing, would you be able to share a copy of your PowerPoint with us?
Oh yeah, no problem. Okay,
That'd be great.
Okay, you want me to send it to you via disk, or you want me to I'll have my secretary transmit it to you tomorrow.
Yeah, just attach. It might be able to just attach it to an email.
Okay, gotcha. That's the easy way. That's the easy way.
Right. Yeah. Well, thank you. This is so much appreciated. I learned a ton. And I spent some time studying this stuff, but I learned a lot, so I really appreciate it.
Yeah, well, sometimes when you read the law, it says one thing, but then the actual application winds up being a little differently. Because we get in that oftentimes with lawyers over some stuff that appears easy. I'll give you a case in point, and I'll share this with you. If somebody tries to acquire title piece of property, and this is one of the things I'm in court on that one right now. If somebody doesn't pay the taxes on the property and somebody buys it at a tax sale, there's two laws on the books. The old law has been there forever. It says that you must go before a judge and have the judge affirm title, which confirms that the person who is acquiring the title has given notice to all the potential heirs to the property.
Right.
In 2009, they passed a law that said that all the person buying the tax bill needs to do is just to go file an affidavit in the clerk's office saying that I gave notice to everybody. I don't trust that. I really don't trust that. Okay, so I got there's one lawsuit I filed for declaratory judgment. They tried to say that I don't have a standing to do that, but I got two lawsuits against me right now, and basically it's saying, well, I won't put the property into the new owner's name, and the reason why is because they only filed an affidavit. I don't know if the guy actually gave notice to the parties or not, because my experience here has taught me that sometimes people who buy tax bills don't want to be found.
Yeah.
So that the 3 years have gone by, and or the 5 years have gone by, and then they all of a sudden they surface and want to put it into their name.
Right.
So that's just a fight that whatever the courts say, I will go along with it. But right now, I'm not trusting the collection agency to tell me what I'm going to do.
That's
or how I should handle it.
That's interesting.
Uh-huh.
Wow.
Right. I know.
Well, we're really grateful to you.
All right. Thank you. So y'all have a good night.
You too. Thanks a lot.
Okay. Bye.
Bye.
Okay, thank you all for coming, and we hope to see you next month. Sarah, it's sign us off.